Hello, guys. Uh, Let me see. Yep, yep. So, hopefully, you are able to hear and see the screen share here. And let me quickly check the YouTube app on my end. By the way, good morning, good evening to you guys, based on the time zones you are located in. And this is Nirav coming with the 48th. Coming to you with the 48th Trading Opportunities webinar live here again. And we have got some big moves specifically in S&P. So we will have a look at that and other things. In the meantime, how are you guys doing? Hello, Steve. How are you? Hopefully, the audio is better today, unlike the last time where we had a lot of issues and we had to waste, I think, 5-10 minutes on it. Well, thank you for letting me know that. Okay, what about the other guys? Have you guys joined in? If yes, please do let me know. Playback speed. How long have we been doing this? Let's say. Okay, so since the audio and everything is working fine, the other people who are going to join in will soon join in. And hey, Charles, how are you doing? And in the meantime, let's get started with the about us part. Very quickly, I'll give a very quick introduction. And yeah, how can I forget? Before that, we have to go over the legal disclaimer. So very quickly, here is the legal disclaimer on screen, guys. Suggesting that all content presented here is purely for education purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading or investing, you yourselves will be liable for your profit loss or loss of profit. With the legalities out of the way, let's just proceed further. Prayer Craig, thank you for the confirmation. Charles saying, well, and you, thanks. I'm doing very well, Charles. Thank you for asking. So let's now start off with the very quick introduction. So guys, as you already know, what is happening? I clicked again on the wrong link. And where's that? So as you guys, I was saying already know, I'm the admin and owner of the website 50 Eyes Market Analysis. This is a website where I have been presenting my views for last 7 or 8 years, right? And during these 7 and 8 years, I have built up a consistent track record of 80% plus accuracy for 2021. As you can see, 82.22%. There's a spreadsheet which will load up here soon. 2020, 88.52%. Again, the spreadsheet is taking its time, and so on and so forth. You can check 84.88, 84.61, 87.5, and 83.34 in 2016. The reason I show off this accuracy every time I start off these webinars is so as to give you a context about the level of expertise in my chosen field of work, which is trading using the advanced concepts in Elliott Wave, on which I have also written a book. And the accuracy, the way we have calculated is we have selected the, not selected, we have the date over here on which the live stream was done, the instrument names and the analysis, followed by the link to the live stream and what happened afterwards. Things that worked are given +1, things that didn't work are given -1. So on and so forth. You can check all the spreadsheets here, and it has been a public record for the last 6+ years. 2022, I never got the time to calculate as these reports are very detailed and take a lot of time. So, anywho's, that's about it for our accuracy. And lastly, before we proceed, this is the YouTube channel on which this broadcast is being done. I'm also broadcasting it on LinkedIn. So, wherever you are following this broadcast, you can always type in the comment section and I'll make sure to check back and revert back to you. And as for the previous webinars, you can click the live button on the YouTube page and you can select any of the previous broadcasts like 47, 46, 45, and check what we were saying. So far, our tally stands at 54 big moves captured in the last 46 webinars till this one. So we will check what happened in 47th today on this live stream. Right. So 54 trades so far we have caught. If you want to catch these opportunities as we discuss them in live market, you will need to join in live. And also I only take questions from the live audience. So yes, you will have to join in live. Right. So that's about it for the introduction. And yes, one thing I would like to ask you guys, and I'll probably have to ask it later as well when the audience has completely filled in the chat room. I'm thinking of starting a what do you call YouTube subscription thing. I think it's called the join button on YouTube. Right next to the subscribe button, it will give you a join button, and if you click on it, it will ask for some payment, and I can give you some special privileges for that. I was thinking of doing a private uh, payment medium, but I'm personally not interested in starting another private group because I already have one for my classes, right? The personal classes I deliver, I already have a private group for it. So I have decided to start with the join button, and the plan is to start around the 50th webinar, which will be very soon in the next week, actually. So let me know what are your thoughts on that, right? And I'm planning to keep the pricing also generous. So that's the way we will proceed further. Let me know if you have any thoughts on it. And let's now proceed with the actual webinar's content. What is it? Euro USD. So Aditya Agarwal is asking, why would you want to make it paid so soon? So Aditya, it's all free. The join button means you can join in if you want to, or you don't want to join in, then don't join in. Also, the live audience is limited, but the webinar is watched by a lot more people than 8 once it's complete. Lastly, if something is of value, you should pay for it. If you don't want to pay out for it, nobody is asking you to. But these analysis take 3, 4, or more hours to do. So I don't particularly like your tone, but yes, you can have your own opinions. So let's now consider the chart of Euro USD instead of our jibber jabber. So first is on screen Euro USD chart, 1 hour time frame. Let me quickly note it. Okay. So last time when we discussed, we were of the view that we have shorts incoming because it has broken the low, right? And because it has broken the low, we were of the view that partial entries should be made. We have already discussed that, right? And since partial entries have been made, generally by partial entries, I mean if that generally someone enters with 10 lots, they will enter with 1 lot or 2 lot, right? And remaining they will enter as the market continues going higher, or the best strategy is when it starts to go down again at the breakout. Right? So that's the way generally these things are done. This is called position management or position sizing, actually. But since we have already discussed it and these things have already passed on, so you should have been able to do what we discussed, right? So now what's happening is, last time when we discussed, we were of the view that either the market can go down, or the more interesting or not interesting, the more what do you call important view was, or more likely view was, that we will see an up leg before the fall. Okay, so you can check that in the recording on the 47th webinar. So in particular, what we were thinking was a possible flat pattern, right? So now that it has already seemingly done that, market can now continue lower, right? So because the market can now continue lower, there are two things. If you have already entered partial shorts, you can wait for, as I said, to add longs near the break, or if you have not, then this becomes wait and watch for a momentum break, down trade, breakout, whatever you would like to call it. So long story short is, partial entries can be made here at the current level, stop loss above the last known high, which is around 1.06925. But actually the market can go a little bit higher as well. So this stop loss may need to be adjusted because the flat pattern can and sometimes does go higher than the wave A high. Okay. So in context of that, we may need to adjust it at a later point, but so far the simpler setup would be to wait for a breakdown. Oh, let me remove the text from screen 1 second. Yeah, so as I was saying, so the better setup would be to wait for the breakdown. Hence, the conservative entries would be near the break of 1.05308, right? So that's about it for Euro USD. Let me know if you guys have any questions or doubts, and if not, please do type in clear or understood in the comment section. So there has been a comment. Charles asking depends on the fees chart. Nirav, yes, well that we'll see. I also am doing this webinar since a long time. I would also like to see how much serious people are, because as I know and I have personally experienced, things that are not valued should not be continued. So if the response is good, I will continue doing the webinars. If not, then there's also not much point in wasting 4 or 5 hours every what do you call consecutive day in a week. So again, that's about it for EURUSD. Thank you for Fraser for the confirmation, and Charles and Steve. Now let's get ahead with our next chart of EURCAD. Where is that? So EURCAD is exactly moving as expected, right? So what we 1 second. Yeah. So what we have on screen is the count which is playing out precisely as we discussed in the last webinar. The count we discussed was an impulse heading in the upward direction, like so. Let me readjust it. And not only is it moving up as expected, it has also achieved our target minimum. Because if you are attending these webinars regularly, we have taken long up trades around here. And then there were re-entries and some alternate views and whatnot. But particularly at the break, somewhere around 1.44, we had first suggested the long opportunities, right? And I also have traded long on this counter. So the target has always been the last known high, which is around 1.46417. And the market has already gone higher than 1.46417. So it has given us a +1 trade. This makes our tally of the trades that I've worked in the previous webinars to 55, right? So, and this is also not a very small move. We have, as I said, entered firstly around here, and then we took re-entries around here, I think. We will have to check the last webinar, but I'm pretty sure we have caught at least this part and somewhat like this part over in our last trade. So let me just quickly update our number of trades here. Okay, so that's about it for our what do you call current outlook on EURCAD. It is exactly moving as expected. So if you are already in the trade, then you will have to trail, of course. And if you are not in the trade, then you should attend these webinars regularly, right? Because the opportunity, which was the simple opportunity or the less risky one, has already passed, and hence I'm not going to advise any new entries. Just keep trailing depending on your entry. Again, I will not advise the trail levels because based on the time you took the entry, you will have to adjust the positions yourselves. But I believe the audience here is quite familiar with the ways we label waves and the way the price moves to decide that on their own. Let me know, guys, if you have any doubts or questions on this counter before we move over to our next chart. How about you guys? Were you able to clearly capture any of these movements that we discussed? If so, do let us know in the comment section, or what do you call the chat section. Okay, so that's about it for this discussion. It looks like everybody is clear on it. So let's now head over to the next chart. Is the unclear one, USDJPY. Let me first quickly check which count is the or which chart is the one we are currently following. Yeah, this is the one we discussed last time in greater detail and is the one we were following. Okay, so let's see how this has progressed. So, firstly, what we were thinking was last time when we discussed is that this was one of the two main counts that we had, right? And this particular count suggested that this wave A is being followed by a corrective structure, which will then be followed by a possible leg up. And we were at that point in time at the price level of, let me currently quickly check. So last webinar was conducted around 8th of March 2023, right? So yeah, 8th of March 2023. So that means the price would have been here. So somewhere here was the last time when we discussed this thing. And our view was that this is going down for a flat. So we were able to capture this leg down as per our last webinar, right? And this makes it another plus one. If you were able to follow me in the last webinar, then we have discussed this leg down already, right? Now, the important thing to update is that after this leg down, which seems to be having a five-way progression ending somewhere around here, we would have thought that this market would reverse, but it's still continuing lower. So that suggests that either the C is continuing lower as in an expanded flat structure as per Elliott Wave terminologies, and if not an expanded flat structure, then this market is doing something else, and this count is completely needing an update in the coming sessions, right? So for now, we will just go with the idea that maybe this is following an expanded flat structure, and in which case the wave C will go lower than 135.35. So once this market goes, actually not 135.35, let me check again, around 135.38, right? So that means if this market is going lower, then it should take out this low for the expanded flat. And once it does that, then we will again start looking for possible long setups, because we are still holding the view that this market is going for an A up, B down, and it will be followed by another C up, right? So that view still remains, but as I've said, I'm not very happy with the counts or the way this market is playing out in USD JPY, and I personally am not trading this instrument for that reason. Although we have caught a very good move, I was not in it, right? But in case this market reverses below 135.38 or whatever that low is, this low is, then and after the reversal it takes out this alert line which is placed around 136.78, then we will be interested in longs, and I personally will also look for possible long trades at that point in time. So again, that's about it for this particular chart. Let me know guys if there's any particular doubt or query while I quickly check one thing here. Okay, it looks like the audience is quite clear on the discussions. Thank you, Charles, Steve, and Fraser. Let's now head over to our next discussion, EURJPY. EURJPY we discussed last time. There were again, this was a what do you call wait for breakout kind of setup. We had the position set up at both ends. At the upside, we had this alert line at 145.443, and at the downside, we were waiting for some more clarity. So the only clear setup was that if it breaks 145.485 to the upside, we will be looking for long trading opportunity. And yes, some short-term selling opportunities were there, but they do not seem to have gotten very or given us very clear signal. So it still remains the same. It is still a wait and watch for a possible breakout. Again, the clear setup is to the upside, which is that if it breaks higher than this alert line, then we'll be looking for longs. Otherwise, if it's falling, then we again, as I said, do not have clear confirmation of the fall, and we would like to wait. But in case the market does fall, then it is likely that this market will take support within this region of 142.54 to 141.85. Right? We have already discussed all these things. So looking at it short term wise, what I can see is that I think there is some intraday short trading opportunities forming here. I will be interested in looking at it after this webinar, as looks like we have a WXY in play. Maybe the X is complete, but looking at this leg down, the strength is suggestive that any pullback, if it's a corrective three-way structure, then that will give us a possibly good sell setup, right? So that's why I will be analyzing this on a shorter time frame. For the time being, this is the setup. For upside, we have discussed the level, and for the downside, intraday plays, you will have to go on a lower time frame because currently we do not have the setup, so we'll have to wait for it. But I have given you a rough idea. Actually, I'll just quickly draw the arrow to give you a proper idea of what I'm saying. So this is the kind of structure we are roughly expecting. Keep in mind rough progression, not the exact thing on EURJPY. I think we had two charts on it, so let me just quickly check. Yeah, but the progression I think was the same. So that about does it for our quick outlook on EURJPY. We'll now head over to crude oil. Thank you, Charles, Fraser, and Jill for the confirmation. So crude oil again, you know the story. It has not given us much of a clarity at all for last 7 8 webinars. So basically last 3 weeks or maybe more. The current setups are basically just again wait for breakout, and it isn't really giving us anything more than that. Very quickly for the new participants, we are thinking that maybe this is a one, maybe this is forming a two or completed a two, and then maybe it is heading up, or maybe the two is still going sideways because again this is all in a box range. So maybe it's a WXY kind of two. Who knows? It can form multiple variations if it's just a two. And second thing is that whenever this completes, we expect upside. So long story short, we wait for the breakout of the range around 81.97 or 81.386, somewhere within that range. If the market goes, we'll be interested in some longs. Rest, if it goes lower, then we'll be interested in some shorts. Nothing really to add here, right? There is the triangle outlook, but I've discussed it so many times. You guys already know it. So I'll just leave it at that, and we'll just quickly head over to gold without wasting any time. However, I do have to say that after discussing so many big moves and big trades, the participation in these webinars has been extremely lackluster. And I have to honestly say that there are people charging $200 and whatnot. I'm giving these for free. So it looks like people do not take things which are free for seriously, or with seriousness, I must say. At least the participation should have increased. I have not charged anything for these things. So I am a little bit disappointed with that aspect. But then again, my lack of marketing efforts or zero marketing efforts may have something to do with it. Again, at this point, I would like to request you guys to share my work. Who knows when the algorithm might pick it up, or maybe your sharing will help it do it faster. And also, do not forget to hit the like button. I've seen often that a lot more people join in live than the number of likes we receive. So make sure you do it right away if you are listening me live. Okay, so now let's head over to our gold chart. So gold, we have discussed last time that it was looking like a possible flat structure, right? And I had this opinion. Actually, I haven't changed anything on this chart. So we had this opinion that this might be following a flat structure from this point of reference, which is the price level of 1804, and it's a flat structure. That means it can go like this. It can stop either a little bit below this line, which is the price around 1857, or maybe a little bit above this 1857 line, right? So it can stop somewhere here or stop somewhere here. Both are fine, right? So since both things are fine, that means basically that we are still waiting for the clear sell setup, right? That basically means there is no selling opportunity as of yet, unless of course you are looking for a swing sell. Then you can hold partial short entries and then wait to add more as the market progresses. Another reason I'm not interested in selling it right away is that the important resistance level comes in the price range of 1900 to, what is this, 1881, right? So 1881 to 1900 is the resistance level. So although it is less likely that it will go there, but it is not completely out of the question. And I personally do not want to be holding a short position which is going this much against me. Long story short, we expect this market will give us a sell setup, and it is following our count as well. Let me just quickly push it there. It is also following our count quite nicely, but we are not going to enter just yet. So wait and watch. Maybe it will give us a clear reversal sign, maybe some big fall, or a reversal near this last high around 1858. That will be of significance. If not, we just wait and wait for a clearer opportunity. And as I said, from a swing perspective, it is already a short, but you can enter, let's say, if you are going to enter with 10 lots, maybe let's say add one or two lots, and then keep holding it for a clearer reversal opportunity to enter more. So that's about it for gold. Since it's a wait and watch, but the setup is clear, push it in your watch list and keep a close eye on it before we move over to our star of the day, which is S&P's 500. Where is that? Where are the confirmations, guys? Let me know quickly so that we can move over to the next chart. So I would have said that out of concern, but your tone is wrong way. So we're doing course clear. Well, I'm just stating the status quo, Aditya. Also, I have to check how serious people are, so that's why we are pushing it. And I have not seen you in any of the webinars in the comment section, so probably you do not know the conversations we are having. Will be better if you just wait and watch for now before taking part in those kind of conversations. So let's now head over to our next chart, which is the S&P's 500 chart. So without even discussing the chart, first let me know if you were able to capture this move down, because we have discussed it way before it actually started to progress to the downside. Let me just quickly show that on screen. Yeah, so there it is. We were actually able to capture it right at the start. I think right at the start. If not, I will have to actually check the webinar, so I will not say right at the start, but I am very, very sure that we were able to capture it around 4060, 4055, 4055, let's say. So we had initiated shorts around 4055-ish levels, right? And the target was that it will go lower than 3920. So as I said, I will not discuss the count. First, tell me how many of you were actually able to catch it. Okay, where is it? Steve is saying, I caught the move down. Thanks. Well, that's nice to know, Steve. And thank you for letting our audience know that. Right. So, see, guys, I am a trader first, and I do this so that I am always up to date with the markets, because sometimes we have the tendency to ignore a few markets here and there. Gold has crossed. 1 second. I'll say it's already going higher. And the strength is a little bit more than expected for this kind of C. So I'm definitely not going to add shorts right away. Yeah. So yeah, as I was saying, we were able to capture this big of a move on S&P's 500. Yes, Steve, since you have caught it, would you mind telling our subscribers what was your rough entry level or rough exit level? Or if you can disclose your actual P&Ls on this trade, maybe that will attract more viewers. I personally am not a fan of this kind of thing. I like to talk things in percentage terms. So whatever you are comfortable with. What I've seen is that people online are generally more interested in raw dollar figures. So we personally were of the view of shorting this counter around 4055, and our target was 3920, right? So let's see how many points we have over here. So we clearly have gotten 130 points over here. And obviously the market has surpassed our expectations, right? It has gone to around 170-ish points. Now the important thing here is that this leg down, let me just remove it to here. So what I was saying was that roughly speaking, actually this is the point I wanted to make. So let me just make this one point very clear. This leg down is a little bit more, not little bit, is actually too fast compared to the expected way this has supposed to progress. So now I'm thinking maybe, although we have caught the move, it is having more downside remaining, right? It is also possible that this is not a diagonal but a nested impulse in the downward direction. So that basically opens up the possibility of more downside movement. And that will go back to our 40th webinar or around 38th webinar, where we discuss the possibility of a long drawn triangle, which will then be followed by downward movement. I'm not going to go in detail on that. What I'm basically saying is that this market has given downward movement, which is faster than expectation. And I am still thinking that this will fall. Net short, I'm holding on the indexes, right? Based on that. And it is so far working because I'm holding net short for the last 7-8 hours. So, fun fact, not only I was able to capture this, I added shorts again after taking profits here, right? And then have kept on adding. So this is definitely a risky kind of trade because the minimum expected target has already been achieved, but I have my own proprietary indicators, not indicators, proprietary methods which I use. On based on that, I was thinking it will fall, and it seems to be working out so far. Let's see how long it goes. I do also have downside targets currently, as you can see, the immediate one is the low, and the next one is around 37.83. And if somebody is interested in the actual counts, then the actual counts, you can check around 38th webinar. I think we have discussed the whole triangle followed by downward movement. I don't want to get into it because we have discussed it in one of those webinars in extreme detail. So let me know, guys, if you have anything to ask on this counter. It's basically, if you are still holding shorts, then keep trailing it kind of trade. And as I said, I'm not going to disclose the complete reasoning of why I'm still short, but it seems to be working. So I'm going to hold it for now. Right. Let me know in the comment sections if you have any doubts or queries. And here's the comment from Steve. 2 trades, approximately 120 points. Well, that's nice. So with that, let's head over to our next chart. Although I think there is some latency issue because I still can't see your confirmations, guys. I'll just head over to our next two charts, which is going to be Nifty followed by last one is BTC. So Nifty, we were thinking that in the last webinar, one second. So in the last webinar, we were of the view that maybe this market is forming a 1, 2, 3, 4, 5, and we had some levels marked here. Let me see which were the levels. Yeah. So this was the price level we had marked last time. And we were hoping that maybe this was the 4 and maybe this will head up for the 5th. And the view was that if the market goes below, what is this, 17,647, then it will suggest weakness. And below the last low around 17,600, roughly speaking, it will suggest that there is something else happening. So, and the primary bias was that it will head up for the wave 5, right? So the primary bias, first of all, did not play out. It never went up for the wave 5. It straight out, not straight out, but yeah, it did go over the 17,647 to the downside and then even broke the 17,600 level. So I was able to capture shorts, yes, but I was not able to capture the overnight shorts, which I had the idea of taking, but I just did not enter them. But long story short is it is doing not what we expected in the short term analysis. But if you are following me from the past 4 or 5 webinars, then you already know that I have mentioned it multiple times that this market is still not out of the bearish territory until it has taken out the 18,134 level. And there was also one more important discussion which we did on the daily chart. If you guys recall, I was pointing towards this. Show you. I was pointing towards these 9 red candles which were having consecutive lower moves compared to the last candle. That is to say that the close of this candle followed by another candle which is going lower than the low, and then again which is going lower than the low and lower than the low. So this is extremely bearish, and based on that, I was also saying that it is possible or it will not be out of the ordinary if this market gives a gap down movement, which did not happen. But yes, this gap down movement and this current consecutive red candles, 2 red candles, not very consecutive. So 2 red moves is still suggesting that maybe this market is still heading for more downside or has more downside remaining. So again, a counter to remain cautious on, and yes, this market is now open for more bearish move, which can test 17,100 and 17,000. Maybe even in the next session, it can open gap down. As I've discussed it in greater detail, I think in the webinar conducted around 28th February. So check around 28th February webinar. We have discussed the reasoning, and most likely I've also discussed the downside levels in that webinar. So for now, what I'll say is that the bearish view is very strong, And I personally think that if the bearish count is to play out, then this market will remain sideways until around 17,600 level, roughly speaking. So we do not expect it to cross 17,600 to the upside. It can remain sideways within this range and then fall if it is going to go for the bearish move. And secondly, it can just gap down, right? The gap down possibility is becoming stronger and stronger given the way this price has progressed. So at this point, it becomes more of a, if you were holding swing shorts, then I mean, if you already knew this analysis, then you would be holding swing shorts. And at this point, nothing much for intraday other than the sideways possibility, right? So I guess there is not much to add. And as I said, do check the analysis around. Okay, so S&P is already running, as I said. I have also gotten the alert. The analysis is working out. So I'll manage the positions as soon as we are finished with our BTC analysis. But let me know if there's any questions on Nifty. I think there is enough we have discussed already on this chart. Well, thank you, Parvez, Charles, Steve, and Fraser for the confirmations. Let's head over to our last chart and quickly be done with it. So BTC, as I have said last time, the only important thing to point out here is the fact that we need to keep in mind that from this point we may have a flat correction incoming ABC. The more characteristic trade or the important characteristic trade of a flat correction is that once it is complete, the market can head lower. And if that is the case, this market is now open for 11,000, 10,000, or maybe even lower levels. Right. Based on that, we have decided to not enter any longs on this counter. Right. But I'm not also taking any shorts because I personally do not trade this counter. This is the only counter which I do not trade. I have traded in the past. The brokerage fees were too high, so I decided to stop doing it. And so long story short is only interested in longs about 25,000, let's say, basically the last high. And as far as shorts are concerned, it is definitely open for downside, but I do not want to make any bearish statements. I do not want to receive email from random people saying it will go to the moon and whatnot. So I'll keep my analysis short and simple on this one. Sorry, but we are online public domain, so that's about it, right? So let me know, guys, if you have any doubts, even though we did not discuss this one in detail. And of course, if not, then make sure you have hit the like button, share the content, and share it seriously with the groups of traders or whatever platforms you are using where you think it will be of use to other people, right? So that's about it from me. I'll see you next week. Enjoy the weekend, guys. And I'll just wait a few moments. I think there are still confirmations incoming. Steve is saying clear, Parvez is saying clear. Okay, guys. So I think that's about it for this discussion. And you're very welcome, Jill. With that, let's end this session and talk to you guys soon.